All right. Welcome after tech failure to
Recording.
Peace Home Season 3, Episode 7. Special guest Joe Gravy Graves with I Hate Buying Insurance. We are going to flip the normal catch up on what's going on and go straight into what Joe's doing because he was gracious enough to join us for a short amount of time that he has because it's busy season in your world, Joe. What is going on in
Yeah,
your world?
Obamacare, Medicare. Yeah, Obamacare, Medicare, group benefit season, all at the same time. It's joyous 14 plus hour days.
So, one of the reasons we wanted to have you on is because not having insurance or not having insurance that's really going to help you if something comes up is something that could make you lose a home if you had been able to get into a home, or the medical bills could inhibit you with debts from being able to purchase a home. So, we want to always give our viewers connections to people who can help them so that they can be successful homeowners, so that they can be living a debt-free life at some point, if not now. You cover a lot of states. What are some of the states that you don't cover? How do we get in touch with you? Why would we be calling you?
Well, because you recommend me. No.
Right? Yeah.
Um, I mean, as far as the states go, we're licensed in a couple dozen states or close to that. Our expansion has
Okay.
always been by word of mouth, and somebody
Okay.
says, my child's moving away to school. I have a sister. I love what you did for us. Can you help them? And we're open to consulting with anyone, anywhere. And we do have some products that are available in all 50 states, and then there's others that, some states are a little hard to do business in, like New York. It's just a
Mm.
tough one for a lot of things. But we're
New
open to
York is
consult and talk
interesting
to.
lending too.
It's interesting for everything. But, as far as insurance wise, yeah, this is the open enrollment for Obamacare, the marketplace. Um, they can't use the same word. So it's annual enrollment period for Medicare. And then for group benefits, we usually say open enrollment. But
Okay.
pretty much all of America is focusing, most of us are focusing on getting our health insurance of some sort within the last 3 months of the year, mostly compressed into about 8 weeks. So imagine if they passed a law, Jennifer, that said you could only sell a house 8 weeks a year.
Yeah.
Wow.
Well,
Well,
Except for a few,
think about
except
it.
for a
and
few exclusions.
If we
and a
think
lot
about
of
it,
businesses are doing this now too. Like this is their like Tim just had to choose
Yeah.
last
same.
week.
On top of that, though, what's important to point is, correct me if I'm wrong, Joe, but it's the law. You have to have insurance. If your company doesn't provide it, you're required to purchase it individually or from the marketplace and then prove what you did. Am I correct?
What's called a large employer, 50 or more full-time employees are required to provide benefits, or they can pay the penalties to offset that. The individual mandate, as it was referred to, or the individual penalty. And so if I mention a president, it's just to try to name time frames and
Right.
not talk politics or
Yeah.
better or best. But so
That's our
yes,
standard rule.
originally there was a penalty. Once it came into play, if you didn't have the right kind, you got taxed.
That's what I did. Literally for 2 or 3 years before I met you, that's what I did because it made more sense with me not having medical issues and having to have prescriptions. The amount I
Well,
would
that
have
was,
had to pay out versus my penalty was I chose.
yeah, and we all get to choose. Well, unless there's a penalty that forces you. Anyhow, that went away under Trump first term. So good, bad, or otherwise, that went away. So there's no penalty in most states. Some states have their own penalty, but overall, generally speaking, there's no penalty for not having it, other than how it's going to impact you financially when life hits the fan. And
Yeah.
with our focus being on, home purchasing or keeping your current home or buying a home, I have to have home insurance because you're kind of forced to, but your health, life, disability, and other people insurances are probably as or more important to keeping that home than your home insurance is.
I was definitely rolling dice, and it was funny because I had life insurance. I have 4 children, so I had life insurance, and it was a good chunk because I wanted them to be able to keep the house and keep things together. And then I realized I was better off to my family dead than alive. So I got disability and health insurance because there were, when you're self-employed, you have to think about those things. What happens if I go out and I am in a car accident that the car insurance is not going to cover the situation, and I am incapacitated from work for even a month? That is my pipeline getting filled. And then, Joe, I wanted to ask you too, aside from the ACA, that's the marketplace plan, and there's tons of options. And one of the things I think you're really good at, because for full disclosure, I am a client of Joe's, is telling people what this policy covers, or even going, I know your situation, we've talked, this is really one of the best options for you, but if you don't want this, here's 2 more, without going, here's 1,500 more.
Yeah, picking a plan on a spreadsheet doesn't help. Also doesn't help when there's marketing groups out there that have an agenda. And look, Chevy wants to sell Chevy trucks, right? But the problem with my industry is the sizzle that's sold versus the actual steak that you get. And there's a lot of marketing groups that are offering, to use a friendlier word, offering products that sound great, no deductibles, big national PPO network and such, but when you look at them, they're at most like a limited medical plan. They actually work more like car insurance. They pay up to a certain amount. And look, it's expensive. It's a lot of money for a lot of people, but almost none of us have the ability to spend 6 figures, 7 figures to save our spouse's life, to save our child's life.
Yeah.
Because the burn unit at Vanderbilt is very expensive. Cancer treatments are very expensive. A traumatic accident is very expensive. We all get caught up in the minutia of, well, what about my urgent care copay? How much is that? Like, well, that's really like worrying about one tire, since Lance will maybe allude later that he's got a truck full of tires right now. One tire when your engine and transmission aren't covered.
Yeah.
So major medical's the big money thing that we talk about, but I'm glad that you said stuff about life and disability. When it comes to keeping your home, yes, the big bills will impact that, but most bankruptcies come from a medical situation.
Yes.
Statistically, most of those people had health insurance. What they lacked was, and I know I talk to people and they go, oh, he just wants to sell me something more. Your accident plans, critical illness, short and long-term disability, hospital admission. Any more health insurance has moved. I use a real estate analogy. We want those big open floor plans now. We don't want a bunch of walls obstructing. We want to see from the kitchen to the living room, just for community's sake. And then you fill it in with all the chairs, couches, drapes, lamps, carpets, and you make it your own. And when you buy health insurance that way, you buy the larger home, if you will, for the most important for the big stuff. But then you need to go in and customize it and fill in those gaps with your accident, cancer plans, critical illness, and hopefully working with an honest broker who doesn't have an agenda for one company that will shoot you straight.
Well, and that's what we were talking about at the beginning. Oh, go ahead, Lance.
Well, I was going to say, Joe, more than ever, we need Joes in our lives. It's my understanding, and I've experienced this a little bit when I was working with the exchange, is that it's not uncommon that annually plans will change or they won't offer this anymore. And this is a great segue to why you need to know a Joe, why people hate insurance. Because some people think, well, I can just do this myself, but they don't have the knowledge that Joe can share with us about, hey, things change, and they change a lot. Is that still happening, Joe?
Yeah, plans change every year. It's almost like cars. It's the auto show and that drapes over it, and you're waiting for them to tear it off and go, how ugly is it this year? They change by legislation, and they just change by some market influences. Sure, you can go out and do it yourself, but I get calls all the time. The most important thing is if you go, say, in Tennessee, you go online, you go, oh, there's Blue Cross Blue Shield of Tennessee. Fine company, nothing wrong. But you go, oh, it's Blue Cross. I'm going to get that plan. It's cheap. Well, what you didn't check is the network.
Yeah.
Because that plan has a little teeny tiny network versus you go further down or higher up in the pricing, but further down the list to get to the network that the network that's number one with most of their group plans, the S network. I guess S is for standard or something. That's where most of the doctors and hospitals are, but it costs more. You got to pay for that access.
Right.
So they buy, and I all the time, I bought this plan because of the price, and it's either this isn't covered or I can't see who I want to see. So we actually reverse engineer it. Where do you want to go? Who do you want to see? What are your aches and pains? Because even though there might not be, for the marketplace, exclusions for pre-existing, there are some plans for specifically for diabetics, for those with pulmonary issues, or maybe even just designing it in a way, if you are wheelchair bound, you want a home that's accommodating, right? Well, your health plan should be accommodating. So if you're like Jennifer, no aches and pains, God bless that for, our age range
Right.
and such, right? And
Yep.
you can look at a higher deductible, more catastrophic plan versus something that may be tailored towards your particular health situation.
Yeah. And that's what I was going to say. Like, when you asked me that question, I'm like, well, I don't even have a freaking regular doctor. That is something I need to change. But I don't have this prescription. I don't have this. And so what do I want from insurance? I want it'd be lovely to be able to go to a walk-in clinic and say, oh, you actually have strep throat. Let's get a prescription. Or better yet, to do a teledoc.
Yeah, just do it on these things now.
Exactly.
A lot of the time.
And then the other thing I told you I wanted is I want, if I get into a catastrophic situation, a heart issue, I develop diabetes, I have cancer, I have something along those lines. That's what I told you I wanted to do. So you have access to different ways, means, and abilities to cover different people. I did have one question for you too. A lot of employers are offsetting the cost of the premium, the cost of the insurance for their employees. If my employer offers me health insurance, but it's super expensive, am I allowed to not use it and come to you and get something else? Or is ACA prohibited, but there might be another avenue I could choose? Or am I stuck because this is what my miserly boss chose?
I can answer that quite a few ways because yes, if you're offered true group coverage that's endorsed by your company at work, that's one thing versus, and I'm not exactly familiar with what they offer you. Maybe we should look into that.
I don't have anything.
Or are they just offering access to someone to help you with those things? Now that's
no,
totally
I'm
different.
saying like if you're employed by a major employer and they have a healthcare insurance, but the premium that you're offered is really more than you can do for your, like, usually the employee is covered, but like it's the wife or the kids that is more, the spouse, whatever.
But there was a loophole or a problem that was fixed recently that it used to be if you're offered it at work, period, you had to take it at work. I mean, there was affordability tests, but it really came down to whether you were lower in wages at Walmart or an engineer or whatever. If you were offered it at work, if it was affordable to the employee, your family was stuck there. Now we can, well, again,
there's minutia. If you're in that situation,
now
call
families, because I don't like to break up families because of the maximum out of pocket question. But yes, if you've got a great coverage at work, talk about this weekly, but the spouse and kids, it's going to be another $1,500 whatever dollars. Maybe we do go another direction on that. Because the monthly amount is important. It's better to have something you can afford than not doing it because you can't afford it.
Right. And obviously, go ahead.
I was going to say, insurance blows my mind, and it's great to have Joe and you're talking about this. I can have 10 people in a room and ask them about their insurance. In our family, my wife is an actress, member of the Screen Actors Guild. Oh, I am too, because of a commercial I did this year. None of our children, all of our children were born under the Screen Actor Guild insurance. We didn't pay $1. We didn't pay a deductible, nothing. That went away when she stopped working full time in the industry. I can tell you that over the years, when I was with a big bank like Regions, it was a very, very affordable insurance plan that they offered us. But when I went to a smaller company, there were years I was paying $30,000 a year in premiums. Then, Jennifer, you were talking about, if your employee off is sick, can you go with another one? I'm retired Air Force, so I've got access to TRICARE. TRICARE isn't paid for me until I'm 60, but between my retirement, I was 42 and I retired at age 60, I can buy it myself. So I did that for a couple of years. It just amazes me how many different things are out there.
Yeah, there's more than one way to get it done.
And Joe, also, you offer Medicare. You can talk about A, B, all the different subsets, which are super important, right?
Whether it's Medicare, group benefits, and it's great that they stack those seasons. It's the Obamacare season, Medicare season, and most groups are shopping their benefits right now. So that's why it's 14, 16, sometimes 18-hour days over here.
Well, and the other thing I wanted to just remind people, everybody thinks Insurance November, and you should. If you don't have insurance, you should think of November. But if you're rolling along and you have insurance from your employer, and then January 1, you're let go, can I call you and say, hey, it's a qualifying event, right? That's what that's called?
Yeah. It leads into a special enrollment. There's the different triggers, if you will. There's time frames. Just simply, I want to expand on that for some reason, but you said, can I enroll? Yes, you can. You can have a special enrollment period. And then whatever agent you work with, as long as they offer you your options, are they going to show you the healthcare marketplace, Obamacare, all the nicknames for that? Maybe you should be talking about a sharing program. Most of them are. Do they even know that there's other national alternatives that are real health insurance, not a limited medical plan, with sizzle but no steak? Hopefully who you work with is going to go in reverse and actually interview you, ask you about your experiences with health, because it's the most emotional insurance product. Life insurance, Jennifer dies, her kids get a check. I die, my kids get a check. It's pretty simple. Health insurance gets people are wound up with because my doctors, my hospitals. So we reverse engineer
and what the insurance says that you can and can't do. When I was going through my infertility journey, I had to do in vitro. It wasn't covered because it was experimental, even though the first one was done 20 years prior to that. But abortion was covered.
Well,
and so, there's all kinds of things along those lines. So, health insurance is very emotional. And I think that's why it's really important. How many years have you been doing this? 20-something?
Myself?
Yeah.
I got into the industry as a life insurance agent in the year 2000.
Okay. So you are well-versed. You followed the changes. I know you're read up on this stuff. That is not something I want to spend my time reading up on. So thankfully, I'm able to call you, and stay in my wheelhouse and just reach out to you. And again, I want to let anybody know, if you're watching this, Joe can help you in multiple states. And it's good to have those resources of someone who's well-versed in it. I think I said earlier that, if I call you up and I'm like, I want this, this, and this, and you can go, okay, these plans would work for you. And like you were just saying, these plans would work for you. I think one of the hardest things for ACA, for self-employed people like me is, especially when you had the worst year in real estate last year since 1993, when we talk in a few days, you're going to say, what do you think you're going to make in 2026, right?
Well, for the marketplace plans, yes, we're looking into the crystal ball for the self-employed. And some industries, you don't know.
And then you also said that, let's say that I make more or less. Well, if I make less, nothing really happens. I don't get money back. But if I make more, there's penalties and such, right? Like if I underestimate, I owe back something.
Well, we're trying to hit the bullseye on a dartboard that's swinging.
Yeah.
So it's a
And
little
then I
difficult.
said, well, what if I get married? Then you said, well, that household income is included too. So now you could be potentially doubling your income from anything you expected to have.
And that's going to impact, if you're on a marketplace plan, that'll impact the subsidy. So, fortunately, we ask about life-changing events that are coming. You know, of course,
Yeah.
oh, we're getting coverage just for you, but and we're not an online get a quote firm. We're not going to just email you a quote, because there's 5 companies on the Tennessee marketplace in Nashville, and I don't know, 80 some plans probably this year. It just, I can send you a quote. I mean, what do you, it's this wide. I want to go look at a house. Well, let's narrow that down a little bit. You
Right.
know, if you live,
And
you're
that's
single
for the
male, what's one
client's
thing? But if you
benefit.
got 7 kids, we got to look at something different.
And that's for the client's benefit. I mean, it would be easier for you if you just went, go buy one if you want it.
If I could figure out how to sell like 5 dental plans a day online without talking to anybody, wow, it'd be amazing. You know, that'd be a pretty good living. But I like going back to securing your home, and whether it's to buy a home or the one that you have. So understanding the major medical insurance that you have. Not expecting it to do the be all do all. I mean, you don't expect your car insurance to pay for tires, belts, oil changes, etc. Imagine if they passed that law and said that the states, bureaus, and nations had to pay for all that stuff. What you're complaining about your car insurance now, it's going to go woo.
Yeah.
So, and that's what's happened with health insurance. We keep adding in where maybe some things weren't and other things were, and you scratch your head about it. But it's gone from hospital, surgical, the things we don't, and we used to like pay our doctor, maybe with chickens and eggs or something, or we paid them. Now that it's built in, and we could go on for 100 podcasts on why is health insurance so expensive? Why is this covered, not covered?
Well, you can start your own on that.
I've been told that. Maybe after my 18-hour days.
Yeah.
The bottom line is, go ahead.
I think part of the big thing of what the summary of some of what you're saying is, you are the kind of person we like to refer to because you're ethical and you teach on a subject you're well versed on, and you help not just the purchaser of it, but you also, I know you say, call Joe. What's your phrase? If I'm an insurance agent, my thing can't.
If your agent says no, just call Joe.
Yeah, exactly. And that's not, I mean, it's just like with home insurance. There are some home insurance that have an appetite for a different thing, but you have a lot of options available to you. You're versed in them enough to know how to help people. So again, if you're in this situation where you're having to look for health insurance, you don't have it, we don't want you in that position, because we want you to be able to buy a home if something happens to you. We don't want you to lose it because of medical expenses. That's what we're saying, call Joe. Everybody hates buying insurance. It's an absolute nightmare, but he can explain it to you in bite size without having to give you headaches that then you have to go get treatment. Well, I know your time is getting close. I don't want to. So tell us a few more things that you want us to really be sure to know, and we'll probably have you back after your Hell Week is finished to talk about things that people should plan for the next time. We don't even know what the next time looks like, honestly.
Well, to go with your health insurance, which is your open floor plan, and don't skip, whether you're getting it at work or with ourselves, we're going to offer you these things, or with another broker. Don't just say the health insurance is going to do it all, because most bankruptcies come from medical situations, and most of those people had health insurance. They didn't have, budget, emergency fund, but also the supplemental plans in place. We hear how many Americans are living paycheck to paycheck. Mm-hmm. So we typically offer a benefit. If you're not getting it at work, you're coming to us, and we're going to try to show you a benefit package. Pick and choose what you want, but although the major medical is for the large bills that almost nobody can pay for on their own, it's the 2 weeks off of work, the month. or maybe even 12, 24, or 48 months fighting that breast cancer, that's where people fall short. They had the health insurance, but so when you hear things on TV about supplemental and cancer plans, and that's real stuff, and that's actually where you're financially saved. The major medical is going to save you at Vanderbilt or MD Anderson or wherever you're going, but it's that small stuff. It's the little things, because you can have a home, but if it has no furniture and appliances, you got to sit on the floor. It's not very comfortable.
Yeah.
So supplemental plans make it life more comfortable, and really are what save you financially
Right.
from that bankruptcy. Don't cut off your major medical, but we will offer, and hopefully a good broker is offering you a portfolio, almost like buying your own benefits, but for yourself when you're not getting it from an employer.
Yeah, makes sense. Well, I think we're probably getting close to time. And I realized that because we flipped it, nobody understands why I'm sitting here like this today, because Halloween's coming up. And so I'm Mrs. Roper. So
who?
I know. Three's
From
company.
where?
This is from the Mrs. Roper's runs. They do 5.
I think I'm too young for that show. I don't know what you're talking about.
Absolutely. Absolutely.
No, it was a great show back in the day.
Yeah. So, well, if you need
thank you for this.
Honored
to help. I'm always willing to help, even if it's you live in a state that we don't service. We do a process where we a little bit by email, but we almost always schedule a call. You got to hear the human element. A chat bot, a web form can't hear you. So we usually schedule a short phone call. What'd you say?
Give me your phone number.
What'd you say?
Make sure that I have your phone. Make sure I have your phone number and your link to your Calendly or whatever, and I'll put it in the show notes so that people can get in touch with you if they need to.
Okay, I'll give you my more general first conversation, because not knowing if they're going to want to talk about disability or life or health, so it'll be more of a general call. Yeah, and then we'll plan our journey from there.
Sounds great. I appreciate it, and I know a lot of the people listening today will appreciate it as well.
Honored to help, guys.
Thank you.
Great caliber guy. He gives great voice. If you haven't heard that, this guy should have a podcast.
Well, thank you very much.
It takes every November off.
Yeah. All right, guys. Drive safe.
Thank you.
Happy Halloween. Honored to help.
Thanks. For sure. Thank you.
See you, bye.
All right, Lance, since we flipped this on its head, what have you been seeing this week? We'll do a quick summary. Mark did message me. He's got an escalation situation he's helping somebody with one of his coaching calls. So I don't know the details on that. I'm sure we're going to catch up next week. What is that?
Look at this.
What is that?
It's an In-N-Out Burger Tower.
Oh, okay.
Wow. I'm out here in Wilson County where things are happening.
Yeah, and he's been driving hands-free for anyone who thinks we're not being safe. We are being safe. Okay. So Jennifer Weithman, Benchmark Realty. I don't usually look like this, but we were doing Halloween since you came as Ricky Bobby last week. Yep. My lunch appointment's texting me. I hope that it's not canceling off. So we're good. So what were you saying that you have seen before we started the recording? What were you saying?
Crazy. The news has been dropping in little droplets, little raindrops of one of America's largest home buyers is kind of in some hot water. Not kind of. It could be antitrust. It could be SEC. They have been selling a lot of homes. This is why they would be one of the largest home buyers. But it seems like in doing these sales transactions, the PITI, payment, insurance, taxes, and insurance, there's some cases where they were using the unimproved land value tax for the loan and the qualification.
Unreal.
Which is
so that's your income to debt ratio on your payment.
It would be completely out of whack. I mean, you and I I've been originating for 25 years. When I started, I was doing a lot of loans up in the original 13 colonies, as I call it, zip codes that start with a 0. And I mean, it's not uncommon to see Massachusetts, Pennsylvania, Indiana, Illinois taxes that are several $1,000s a year. So if you're using unimproved land values of $800 a year and their taxes are really $800, when they get that first adjustment, Jennifer, we got problems.
Yep.
And we got big problems. And that's what's happening. Evidently, there are a tremendous amount of foreclosures happening because people's payment have gone up in some cases $1,000 a month when the taxes get adjusted. And this
That's
was being
insane.
done purposefully.
So here's
It's
the
called
thing.
willful blindness is what the term is called.
The legal term. When I first started selling real estate back in 2014, one of my early sales was in a new construction home. And the title company put down $1 as the tax value for the year.
Yeah.
And to be honest, I didn't know, that that's something that I should be catching. And the title company should have known. It was not the builder's title company like this.
They're there to protect you too.
Yeah.
That's why we have title.
Yeah, exactly. Because there are things that I know. There are things that you know. There are things that title knows. There's things insurance knows. I know to look out for this now because I was like, well, I don't want that to ever happen to one of my clients again, even though it's not my wheelhouse. Kind of like I'm going to tell you to get a septic inspection if you're buying on septic. You don't have to do it, but I'm going to tell you to. So what happened was in January, they got the new escrow payment from their bank and it went up by there was a $500 essentially special assessment and then a $60 additional a year because they basically hadn't been collecting property tax for that escrow. So from then out, we as realtors get a copy of the Alta balance sheet before closing, like a day or two before closing. And they're like, look this over. It doesn't look right to you. And my response is, if it looks correct, by the numbers, I know it looks correct. Because I only know some of the numbers. I don't know what the insurance is. I don't know what the prepayment is. I don't know what the transfer taxes are. But one of the things I try very hard to look at is what number are they assessing for property tax?
Yep.
Because when you take a farmer's field and there's no house on it, if you look at your property tax, it's land only, and then there's the improved value. And so your land value on a $500,000 home, it might say that the value of the land is $80,000 and the value of it's usually less on the tax assessment than the sale price. And that the improved value is $380. If it's just a piece of raw farmland, which is what most major big builders are buying, maybe it's $1,000 for 300 acres.
Right.
They divide that into quarter or less acre lots. They don't have any idea what it's going to be. So what I do is, if they are not putting that in there, I've had calls where I called the title company up and I said, okay, this house is a $400,000 house. It's in this county and in this city. I've pulled up this listing over here. That's a $400,000 house that's in this county and this city also. I don't want you charging my person a $30 or $1 tax fee for the year. I want you to put it in at $1,500. I'm not trying to screw my client over by having their cash.
I've seen you do this. We've had to do this on
having a foreclosure. You and I
have done this on new construction together.
But when you
are not necessarily where it was $1, but it was like, hey,
this is
$200 not cutting it. Yeah.
Right. And this is the thing with these major builders that have their own in-house title. They have their own in-house lender, or they just have a title that if you use them, you're going to get this. If you use them, you're going to get, if you use this insurance, you're going to get this. And that's what Joe, before we started recording, was like, well, why would people do that? And I said, because they make you an offer you can't refuse. And they do. If you use our lender, you're going to get this. If you use their title, you're going to get this. I remember somebody, and it was not new construction. It was someone else. You were competing with another lender this year, and you asked them, because you have told people, I can't beat that. You do that. I can't beat it. But somebody had sent you their breakdown, and you're like, I should be able to beat this person. And what had they done? They had done something with the insurance, right? Instead of a $200 insurance estimate per month, they put in $50 or something to make
insane. It was, and there was no way it could happen. And of course, it all came out in the wash.
Right. And I said, well, how did they get away with that? Because I thought you had to do the loan estimate. And that's when you told me, well, we can give you a rough idea prior. Like right now, I call you up, hey, Lance, I want to buy a house. What am I looking at? Blah, blah, blah. And you can give me a rough estimate of what it's going to be. But the loan estimate that you're locked and obligated to is not until 3 days after. And insurance is one of those that can change invariably. These others, some of them can't change at all. Some of them can change by what, 0.5%. But insurance is the one, because you as the lender don't know what their credit score is, who they're going to go for insurance.
Not up front, right?
So that's the one.
It's interesting you say that, because there's a loan estimate, and then there's something that looks like a loan estimate, and the consumer just doesn't know. You know, I'm going to poke a little fun here. I'm going back and forth between my map of making sure I'm at the right place.
Okay.
I was going to say that you said we'll make an offer you can't refuse. So for those of you that don't understand the context of what Jennifer means by that, it's not just what the words say. It will make you an offer you can't refuse. Oh, wow, that's a good thing. No, what it says is you've got to take this offer. That's what she's trying to say. These big builders are like, we'll make you an offer you refuse. No, I'll go someplace. No, you can't, because my offer is conditional on all these other things.
Yeah.
And that's when I mention antitrust and SEC, that's where the people overseeing things have kind of taken their eye off the ball again. We're not going to get back to 2008.
Yeah. But it's a mess.
Yeah, we as a country need homes to sell, because that makes things happen.
Yeah.
But Ben, Jennifer, I've got to jump off of here of the call. I apologize.
No worries.
I think I enjoyed having Joe. You and I both worked with Joe. He's my client. The guy who just really takes care of people.
Yeah.
It was important to point out, I don't know if it happened because our first call got cut off, but you had a big aha moment in that Joe pointed out that you had insurance coverage that wasn't right for you, and no one had told you any different. It was incredibly wrong.
Yeah, I thought I had insurance. Like right now I have a high deductible. And so up until my deductible, I'm covering things, but then anything catastrophic after that is covered. What I had previously had that I thought I had insurance, I had good co-pays. I could go to the walk-in and all these different things. But if it hit above a certain amount, there was no coverage. So I think you bleeped out again. We're going to go ahead and cut this off. Next week, Mark's going to be talking about budget, getting ready for the holidays, how to budget well for the year and set a budget for the year. And then I'll tell you all about how Halloween with Mrs. Roper went. And I'm getting ready to have my new listing. So
awesome. I can't wait.
Doing that and telling people about that. It's a great home down in Tullahoma. If anybody is PCSing to Arnold or AEDC, or you're already living in the Tullahoma area and need a little more space, 4 beds plus a office or a bedroom on the first floor with a shower. So it's great for generational living or frequent guests. So I'm excited to share that with everybody too.
Awesome.
So take care until next.
I'm excited to share. I just paid $2.55 for gas.
Oh, nice. All right. Talk to you soon.
Everybody have a great week.
You too. Bye.